Hello, everyone from the Della universe. This is today me, Rajesh Sharma, and with me I have Sunil Goyal, and we both are going to speak on a very interesting topic, and we both are members of DLC Global BFSI Committee. Just to introduce myself, I have built many businesses in the past. The most recent one being the brand capital investment business for Times of India Group, where over the last about 15 years, we invested in more than 1,000 companies, deployed close to $6 billion. And as I say, F to F are all our investments. So from the first earliest organized retail play in this country, which is Future Group, to the more recent ones like Flipkart, Grofers, etc. Across the years, we invested in all kind of players, stages, sectors. So some experience from all that I hope to share with you guys today. With me, I have Sunil from Your Nest. Sunil, can you also introduce yourself to our members here?
Wonderful, Rajesh. Happy to be part of this DLC BFSI global group. I run Your Nest Venture Capital, early stage tech focused VC from India. We seed at a very pre-seed seed stage, very early stage innovation and entrepreneurship from India. Now, innovation is one aspect that we believe is going to be there for decades and decades to come by, and entrepreneurs are the ones who are going to be making most of it. So we believe that venture capitalist is going to be the hyper growth market in times, all times, turbulent or good times. That's how we nurture companies at Your Nest. Our focus is to only invest in enterprise B2B businesses, only in IP-led tech innovations. We believe Indian tech talent has the capability to serve global enterprises. And when global enterprises buy your product, that means a startup needs to be the best. And for them to be the best, we say we nurture global market leaders from India. That means they must be able to compete with the best of the world. That's the kind of companies that we look forward to nurture from India. Happy to talk more about it as to how we spot them, how do we align them, and how do we nurture them. These are the kind of things that, with Rajesh, I look forward to talk to you today.
Sunil, I also wanted to add that these days I have set up a growth accelerator firm, and I'm also working on
Yes.
setting up a fund. And the idea is to leverage all the learnings over the past years and create some new exciting growth stories.
Yes.
So I think today's conversation is going to be useful between the two of us, and hopefully people watching this can get some insights into building businesses, raising funds, and all.
Happy to know that you started an accelerator and you're looking to raise another venture capital fund for India. We need thousands and thousands of venture capital funds in India. Let me tell you, till the time there is a venture capitalist who says, I want to invest in a trading business, I want to invest in a manufacturing business, I believe the VC's jobs is not done in the market.
Absolutely,
Every
absolutely.
business is profitable. It is only because there is a lesser amount of capital available in India today. We only go after technology-led businesses or tech-enabled businesses. There is an opportunity across for one to make money and create some innovations around.
No, absolutely, you are bang on, Sunil. In fact, for many years in my presentations and conferences, I used to say, okay, so I always used to have this slide. On the left-hand side, there used to be a seasoned businessman's picture with gray hair like you and me, and on the right-hand side, there used to be a college kid's picture. Okay,
Yeah.
and ever since and I used to run this slide in most of my conference addresses, that who do you think will create the future? And in India I have seen that sometimes it was this businessman, gray hair, on the left hand side, and sometimes it was this college kid. And we see those cycles. So last 5-6 years also belong to college kids, and you see so many IIT kids getting funded and all. But I also believe what you just said, that the ideal combination is the marriage of experience with new ideas and new energy. And in fact, incidentally, that's also one of the focus areas that I'm working on. How conventional businesses, which have a lot of experience, they are creating real products, they can actually join hands with the new energy and create new future proof products and businesses.
Well said, Rajesh. And I must give a anecdote out here. We go to raise capital all across the world. And sometimes in these events or family offices, when we talk to people, there are people sitting with the wealth of generations and generations. And these people are the people who run traditional businesses or what? Not
Yeah,
creating a product, but only being, let's say, distributors of Mercedes or the various cars. They were
yeah,
only car dealership owners,
yeah,
but made enough money. So
yeah.
even by doing a certain thing sustainably from generation to generation, you know and you learn how to run a business.
Correct.
And to your second point, it's a very, very important aspect for any entrepreneur who reaching out to a venture capitalist. If he has or if he wants to do a startup, his mentors should be a businessman. His mentor should be an entrepreneur. If a
Yeah.
mentor is a professional, it's good for your first line, but that person is not good for you. You need
Yes.
to be mentored by an entrepreneur because you're going to go do an entrepreneurial journey. This is the
Absolutely.
reason we say, Silicon Valley produces the best of startups only because there is so much of entrepreneurial talent guiding it. Thanks to it, that in last 7-8 years, Indian ecosystem has produced so many entrepreneurs to guide us.
Yeah, yeah. No, no, very, very important. So Sunil, let's start with the, I think the most important question. So we have seen how the Indian landscape has changed dramatically. In fact, I remember that even as late as 2010-11, when I used to go to Bangalore, there were hardly any ventures out of Bangalore. In fact, people getting into business, I remember you used to be considered black sheep there, and now Bangalore is like the Silicon Valley of India. So it's a 360-degree churn. Actually,
Yeah.
earlier at that point of time, Chennai used to be much more hotter from a venture perspective than Bangalore was. And in such a less time period, things have turned 360 degrees is amazing. So Indian entrepreneurship venture journey has been very, very rapid in the last few years. So now there are so many people, so many youngsters aspiring to be entrepreneurs, having started their startups and all. And a big question that we get to know from all of them, or we hear from all of them, is how to do fundraising. And while some seem to raise it very easily, others struggle. So the topic of today's discussion also the challenges in fundraising. So I think let's come to that, and let's try to get as many pointers on that so that the audience hearing this can benefit a lot. So Sunil, in your view and from your funds perspective also, if a startup has to raise funds, what are the important things that you would want to tell them?
See, whenever a founder needs to step out, he has to first be very, very clear on his purpose. The clarity of purpose, how simply he can define that particular goal of life, and what is driving that purpose. What is that unique customer insight that has given him the rise to be able to dedicate rest of his life for that particular cause, is the core factor that we would like to understand, and that should be clear. If you do not have deep enough emotional story or a driver of why you become an entrepreneur and what change you're making, please go back to the slate and find a real cause. It is not about making money. It is about bringing in a significant change. And for coming to a venture capitalist, by that time, you should have sold that idea to at least a few people, a handful of people maybe, who have come along who are better and more talented than you. And you are ready to say, yes, I believe in your thought, I believe in your purpose, and hence we are joining in and we're giving up every other luxury of life, because somebody joins a startup only when they say that, I can live without my comforts of life for the rest of the years, and hence joining you today. So that's the another aspect out here, that the talent has joined you already before you come to the venture capitalist. We see and we need to see far more talented people who are relevant for that particular role. I don't want gray hair person to be sitting as a CEO or a chief operating officer who may not be nimble enough to adapt to the market. Look at the kind of market changes and scenario changes. There are technologies that are playing from every corner. It is not about only one technology. It is about multiplicity of technologies that are bringing in change, from AR, VR, blockchain, to crypto to AI, etc., etc., etc. You keep naming, and I know how much things happening on the biotechnology side. So there are so many things happening. Economic scenario, it's become unpredictable today.
Yep.
Adaptability is the thing that we look forward in our discussions in the with the entrepreneur. How quickly the person is able to say yes, this makes sense. Doesn't make sense, and the reason he's not accepting any point of view, they have a core in-depth analysis. I also look at that analysis part. I must go deeper. When I launched my fund in 2011, you
Yep.
talked about Bangalore. I happened to spend around 35 days in Mumbai, Bangalore, Chennai, meeting various private equity, venture capitalists, and angel investors, learning from their experiences. These are core time that I was spending, and I was learning from them. I thought that I have learned enough by meeting those 40, 50 people.
Huh.
And there were 40, 50 people in the industry for me to
Huh.
meet also. Okay.
Yeah.
After that, I started the fund. And today, I believe that I made a mistake. And the mistake was my aspiration was to become one of the best global tech VC funds.
Uh-huh.
And I did not go to Silicon Valley for 2 weeks to learn
Yeah.
from the best and the best. If you are doing a startup, I would like to understand what in-depth analysis have you done before
Yes.
launching your startup.
No,
So
no, very important, very
they,
important. In fact, I see so many startups having set up without even having done competition analysis that, what are other players in the market offering? Are we better, not better, and all? Can't fathom with that. But yeah, you're right.
the competitive analysis is such a thing. Person believes that he's the only one who's offering and doing something like this. The world was going around without you all these years, for
Yeah,
centuries and decades. If
yeah,
human need was met, you need to find as to how it was being met so far.
yeah, absolutely. But yeah, I would also like to add, Sunil, that
Yeah.
in my experience, I have seen that the quality of entrepreneurs has dramatically improved over the last 5 or 6 years, perhaps. The kind of entrepreneurs, the kind of businesses that we used to see earlier, like 2006, 7, even like till 10, 12 and all. I think the new breed of entrepreneurs, they are far more smarter. So, how to even raise funding and all, they know, in fact, today, much more than even the seasoned entrepreneurs used to know back in the day. And some of the things that I would suggest to young entrepreneurs is, and as I said, like today, in fact, they have become more smarter. Earlier, they were not so much. Okay. One is first that whatever you are building, you should be very clear on vision, which you also mentioned as purpose of life. So, is the vision big enough? Is the vision large enough for not only you to get excited, but your customers to get excited, your investors to get excited, your stakeholders to get excited, right? And earlier, now this problem is resolved, but earlier, we used to see this problem in Indian entrepreneurs. They were always in a lot of self doubt. If you earlier went out to an entrepreneur and said that, okay, why don't you build world's largest venture in a particular space? They'll think you are joking. They say, oh, like even if we are able to make countries largest or states largest, it's good enough. How can we make world's largest? Whereas in US, even when kids were starting new ventures like Google or Airbnb out of garage, their first thought was, we are going to build world's largest. Okay, so I'm saying that vision is very important. Okay, whenever you are starting out thinking, you have to think about scalability. I'm sure you also, from an investor's perspective, would highly rank scalability. So whatever you are going to work on, is it scalable or not? And digitization, especially post COVID, has changed the world a lot. So earlier, when the world was not digital, you could still have a suboptimal venture in a geographic constraint and do well with it. Okay, because the competition couldn't reach you. But in today's age of all ventures being digital and technology is perfectly transposable in a domain globally now, there can only be one number one player. So earlier, like for example, if you have a clothes shop, right? I have a shop in Bombay, you have a shop in Delhi. My shop is not as efficient, but I could still be doing very good business because the Bombay customers have no choice but to buy from me. But in the digital environment, when both of us have our apparel selling portals online, the the customer has a choice where to buy from, and he is only going to buy from the best, and the best is what you should aspire, so this is the advice that I give a lot to the young entrepreneurs, even the older entrepreneurs, especially in today's world. Whatever you are going to do you think you can be the best in it, the number one in it? What is your competitive advantage? What is the competitive advantage that you are trying to build in the venture? Because today the geographic boundaries are not going to protect you. In fact, digital world is going to expose you, so you better have a plan towards scalability, and have a plan that how can you become the number one player. Because we've seen, Sunil, and you would have also seen in the recent past, that somehow now the investment markets are gravitating towards the number one player. Every investor, see, if you take earlier 2006-7, even if you were number 12 player, okay, you would get valuation, okay, proportionately lower maybe, but you'll get valuation, you'll get funding, right? But today everybody wants to fund the number one player, okay? Even number two player today struggles. So we've seen that, for example, even in online retailing, I don't know, to want to take any names, but people want to fund the number one only. In edtech also you saw that, right? Even the number two player in India was struggling to raise funds. So I think the size and scale of your vision and is very important. And do you have a plan to become the number one? And it's now number one definition is changing, not only to being the number one in India, but number one globally. If you have a
100%.
plan towards that, I think then fundraising becomes very, very easy for you. But a lot of ventures I still see don't have that plan or that thought or that vision that we have to create a number one play in a certain domain.
Very well said. And let me give you some examples of self-doubt and the role that we venture capitalists or investors need to be playing. Today,
Yes.
when we invest in a startup, we do a 3 to 4 hours session with them to share the vision of Your Nest with them. Now, you can say 3 to 4 hours of discussions around the vision of Your Nest with the entrepreneur and their first line happens as onboarding exercise. And that's the time we are able to convey to them, boss, we have seen 4,000 startups this year, and of those 4,000, we've identified only 7 or 8 of them. You are one of them. We've seen the world all around, and now we put in a check. And please have the confidence now to run faster. That's the magic, the money that comes in, and money comes in only when you're unique and best around it. And to become unique is all about talent. And what has changed, why the entrepreneur talent has become so good in the last 5-6 years, is just because there are entrepreneurs who are guiding, mentoring entrepreneurs. The would-be entrepreneurs are watching these entrepreneurs' videos, learning from them, reading from their experiences and books, which is far closer to their market, and hence they're coming out much wiser. And look at it, my vision of Your Nest was conceptualized in 2016 when we said we'll focus on enterprise B2B business. And we said a large enterprise was $100 billion may buy a product of ours only when our startup's product is the best in the world. And hence we coined a very compelling vision to nurture global market leaders from India. That courage I may not have had in 2011 to write, but by 2016, I had a courage to write on my slides.
No, very, very, very important. If you had not defined it as to be the global leader, I'm saying future survival would be a question. So today, for any businesses which are starting, I think until unless they define world as their playground, they are not future-proof enough.
Rajesh, shall we swing the conversation to today's times? I'm seeing number of letters, emails coming across, the presentations coming across. The tough times are going to be coming, and the tough times are going to be worse than what pandemic had. So, any opinion, any guidance, any advice for the startups which are going to be now going into the market to raise capital? How to manage the situation in the current times?
Very, 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 very good question. Also, a very tricky question. See, I think entrepreneurship is all about riding waves. In fact, some of the successful entrepreneurs of unicorns have told me this, and I've seen them. Like, for example, there was a venture in travel space which we had funded in 2006-7, which went bust in the crash of 2008-9. And then since then the founder had been working in a different space, and it was some good 10 years that he had to rough it out. And now it's this new venture of his is again a unicorn. Okay. And it's a unicorn in the edtech space. And recently he was telling me that for 10 years he was working hard with it, and then COVID happened. And the adoption of online education, which was a big challenge, right, which none of these players were able to solve, suddenly became the biggest boon that they had. And money started flowing in and all. So I'm saying, when we are, and he also mentioned this, that many people may think that they are the ones who have created it. It may go into their head, or they may say that we will definitely create it. But a lot of things are also dependent on the macroeconomic environment. And I think a smart entrepreneur is the one who identifies the waves and is able to ride the waves successfully. Okay, so entrepreneurship is not just about slogging on the factory floor,
Yes.
but it's also about identifying the macroeconomic environment. When are you getting the headwinds, and when are you getting the tailwinds? So, and a lot of the ventures, as we know, for example, we had invested in online grocery ventures, we had invested in tech ventures. And I know how for a couple of years before COVID, we were thinking that, when will the consumer adoption start? Okay, we were struggling with that, both in edtech as well as online grocery, right? But suddenly COVID happened, and the consumer behavior changed completely. And what was planned to be achieved in the next 5 years was achieved in like 6 months. So there are these headwinds and tailwinds at the macroeconomic level, which you should also, as an entrepreneur, be able to track and aware of and take advantage of. So the question that you asked, that in the current environment, when funding has become a little challenging, then what do the entrepreneurs do? Obviously, last 2 years were kind of easy money. So you saw a lot of ventures coming in, a lot of them with not very good differentiating products or plans. And also everything was kind of, on valuations and all, also the maths was going out of whack. So I think if you are really an entrepreneur, you will tide over this time. Okay, and we have seen, Sunil, in the past also, that some of the best ventures got created when the overall funding scenario was not very, very positive. Okay,
Yeah.
and I think the benefit that it did to those ventures was that they were in that environment able to come up with rational ideas. Okay, differentiated ideas, products that made sense, product the consumer needed. Because when there's too much money flowing in, okay, sometimes it just becomes like, oh, money is available, why don't I write a plan on an Excel sheet and get funded? Whether it is a good plan or a bad plan, we'll see it later, right? So I think now is the opportunity. And the other big thing I have seen is, in case of successful entrepreneurs, like you were also mentioning, Sunil, in the beginning, they were in the game. So some of them were in the game for 2 years before the good luck struck them. Some of them were in the game for 12 years before the good luck struck them. But they were dedicated to the game. They were there. Because they were there when the macro tide turned, they benefited. If they were not there when the macro tide, there's no way that they would have benefited. So my advice is that yes, things from a money supply perspective are a little tough, but use this time period now to build products and services which in fact make more sense. Deepen your expertise. See what your consumer is willing to pay for. This is a time to build a strong foundation. And when again, after maybe like a year or two, you don't know, when again the money supply cycle changes the other way around, then you will be sitting in a very good position. If you think that, oh, right now money supplies tight, I can't do anything, the day the cycle turns, you can't suddenly push yourself into the play and say, okay, fund me. So because investors will see that what is it that you built so far. So my advice is take this time period to build. And also one advantage could be that the cost of resources had gone out of whack. over last 2 3 years. Now the cost of resources would also tone down a little. So and it'll be easy to find resources. So we all know how challenging it was to find tech resources over the last 2 3 years. So now I think it will be good for the ventures, basically because they'll be able to get resources, they'll be able to get good resources, and they'll be also get those resources at good prices. So they'll be able to build a more efficient business, I believe. What are your thoughts, Sunil?
Very well. What you said, that it is the entrepreneur who should know how to sail through the good times and the bad times. In the good times, the KPI of entrepreneurs, which I used to hear and I used to smile, was this year I will do 3 fundraisers. So every 3 to 4 months, I'm going to be doing a fundraise, whether I need the money or not need the money. And the same guy will now talk about, boss, I will conserve every penny that I have in the bank account and make a plan that I'm able to sustain this for 2 to 3 years. From the storytelling, I'll move to building a business which is going to be profitable, which is going to be self-sustaining. And the people whom we call as the employees, who normally we call at Yonas as challenge engineers, the one who are able to adapt to the change and engineer the things to their benefit. These challenge engineers are the ones who have to be retained. You can't let go of them. So you will let go of the fat that is around, but the muscle is of the people who are the best understand and relate to your vision. They need to be retained. If you're able to retain those talent, you've arrived. And I was talking to one unicorn founder. This gentleman said, headquartered in San Francisco, and he said in the month of January, the HR team said the budget is around 7 to 8% annual increment. They came back in March end or so. No, it has to be minimum 14 to 15%. This is dollar terms, salary increases across the board. And about 2 weeks back, the same HR team came back, 0 increments. Look at the way the things are changing up in the global scenario. Actually, let me tell you, nobody knows how macroeconomic situation is going to be managed in this scenario when the monetary policy has been overused. Fiscal policy, India is using it wisely. Last week, whatever they did in reducing all the excise duties across the board was a very welcome step. But the number of armory in the hands of the government is going to be much lesser to tide over an inflationary situation. The only solace is to get this war behind, get humanity to talk to each other and settle down for that supply chain to become normal. At one end, we are seeing, if you want to book a car, it is a 6 months waiting list. If you want to go to a restaurant, there is hours and hours of waiting to get into a restaurant to have a meal. So it is like, on one hand, the demand right now is high, but please don't be taken by that. It is the cost of money is going to dry up all that liquidity sooner or later from the pockets of all of us. And hence, a business plan that is going to be self-sustaining is the one that will be loved to fund. It doesn't mean that innovation is not going to be funded. For innovation, the money will always be there. You can burn cash for innovating something for the world, please. We will put in money for you. If you have a brighter idea. So look forward to those innovative ideas. There we don't mind burn, but we might burn when you're trying to acquire customers by paying marketing dollars to Google and Facebook.
If a very good idea is going to come to you, very innovative, very disruptive, with a lot of potential for scale, right? You're not going to say no. It's just that the investments funds made in the last 2 years, when the money supply was so rapid, the deployment pressure was there, or FOMO was there. Okay. So the suboptimal things which got invested in, those would not happen, but the good ones would still happen. So which is why I tell the entrepreneurs that focus more on making the product and the business more and more relevant. If you've got a good interesting story at hand, you'll not face challenges in fundraising. You'll face challenging only in fundraising is when you really don't have the merit, but you were getting funds because the tide was good. The tide is gone, so you'll not get funds. But if you have the merit, no matter what the scenario, people want to invest. People ultimately want to grow their wealth. And if they can see a wealth growing idea in front of them, why will they not invest?
And let me give a happy news to the entrepreneurs. There are many funds like your Nest at this particular point in time who've raised capital in last 1 year. And we offer time diversification to our investors. We do not invest the capital within 1 year. We invest normally the capital over a period of 3 to 4 years. So today, our $75 million fund, we have only committed 8% of that. So while getting into this slowdown, I'm sitting on 92% of the capital. Yes, I will reserve 20-25% of the capital of that only for the existing portfolio companies. So
Follow-ons.
if you have investor in your cap table, please make sure you go and meet that investor more often, so that that capital doesn't go to anybody else. That capital is only allocated to you. So that happy situation is what I'm expecting, that there are multiple funds have raised billions of dollars. Yes, in the effect of FOMO, many committed those funds very quickly as well, because it was easier for them to raise capital every year. Now, all that capital is going to become patient capital, not a FOMO capital. Because it's going to be patient capital, capital will be available. Only aspect is just stay focused and go to the right entrepreneur, VC, or right investor to seek that funding. The key offering for any DLC member from our end is that at Your Nest, we continuously continue to mentor entrepreneurs. We continue to look at and even mentor our peer venture capitalists, because it's been 10 years of learning. It's a hard learning. We have made many mistakes in deploying our first fund, because we were corporate executives. So if you are doing your own journey of angel investing, venture capital, please feel free to reach out. You must be making investments as accredited investors or well-to-do Della's members in startups. If you have a startup which is doing well, which you think the entrepreneur is having a promise, please direct message us. We would like to participate and co-invest along with you. So reach out. We need to build this ecosystem of Indian tech going global.
Sunil, I just want to bring in one more additional point, which I think a lot of the viewers may, it's a hard question, but I think today a lot of people are asking that question. Okay, so people today are saying that, has fundraising, over the last few years, had it become some kind of a cartel? Okay, like you've seen, there are some angels in the market who are very well networked with some early stage funds, and then so on so. And I've also heard people say that some people say, okay, if I come on your cap table, then the next round is guaranteed. And many entrepreneurs have come and told me that, oh, because we're not part of a circle, we've not got funded. What's your view on that, Sunil?
I've come across leaders, when they jump jobs from one company to another, they take their entire team along with them. It is kind of a reassurance to that particular person who's working with them, that your pay packet, your growth, your salaries, etc., is protected if you be loyal to me as a this thing. And I personally never ever brought any person from a previous organization to my new organization, thinking that talent can be groomed. It is, you have to go outside and step outside and groom the leaders around you. You have enough opportunity around you. Yes, there is an easy way out. The easy way out is that cartel. And the cartel happens why? Because people know each other. They understand each other. They know their investment thesis. And the thesis are common. Because it's common, it is much easier for them to align for any opportunity that comes across. So yes, I won't like to use the word of cartel. It's the comfort of working with each other, knowing each other, understanding how a person behaves in the board meeting enables them to come along together for many transactions. Whereas there are a number of local venture capitalists like us who have to carve out their way through a hard way. And there are entrepreneurs who have been funded and supported by us. Approach to collaborate started happening in this particular local venture capital market. And that enabled people not to throw too much of money against the same particular venture or startup. So this is ecosystem of collaboration. It's a very small ecosystem. For a fund like us who invest in deep technologies, who invest in hardware, IoT, SaaS, etc., there are hardly any common-minded VCs in the market, because everybody invests in India's demographic consumer also. I go through the struggle of raising the next round of capital, but these co-investors help us tide the wave better.
Yes, yes. No, in fact, what I tell all these entrepreneurs is, see, entrepreneurship is very different from a job. In the job, your growth path is mentioned in the textbooks. Okay,
Yeah,
but entrepreneurship is all about figuring out the gray. If there was a textbook and you could just follow that, then where's the entrepreneurship? Entrepreneurship is doing what has not been done before.
yeah,
Okay, and in that context I tell that there cannot be a bookish perfect path. If you find some imperfection in the market, let's say this cartel or collaboration or whatever, perfection or imperfection, whatever, entrepreneurship is all about quickly understanding whatever is there in the market,
yeah.
and then how do you embed yourself into it and take advantage of it. Okay. Entrepreneurship can't say, oh, no, in my rule book this is written and this is not written.
Yeah,
You know, entrepreneurship is all about finding and discovering and charting the path for the first time. If the path was already created and you are expecting somebody to tell you what path to follow on, then that's not entrepreneurship. That's job.
absolutely.
You know.
Good key takeaway that you put in, Rajesh. It'll be good to now conclude with your offering for the members of DLC.
Great. So as I said, right now I'm focusing on growth accelerator, and our accelerator focuses on turning around the conventional businesses. Okay, so there are startups also that we help, but I see a lot of value in conventional businesses which they have built over decades. You know, so for example, there's a company that we are advising, which is India's largest contract manufacturing company in pharma. And if they continue on that path, the path is not very rosy, because in contract manufacturing, your margins are low, your value capture is low. Every day, your large clients are arm twisting you. Okay. But if you have been in that business for a certain amount of years and have managed to become India's largest and have a very profitable EBITDA and all, we are helping such companies say, what is the reinvention now you can do to
Yeah.
go on to the next futuristic growth path.
Mm.
And there, what we are doing is that, see, from within these companies, because most of the people, no offense, but most of the people working within a company, their main priority is to save their job. Their main priority is not to reinvent, to grow. So here we bring in an approach that we identify the startups in the related space, okay, the young kids in the related space, right? And then we see how the big business house can have a marriage with that startup and new growth stories can be created. So that's our focus. And anybody from the Della universe, any point of time, thinks any advice we can provide, happy to assist.
Wonderful offering of making these large entrepreneurs, businesses more innovative, more adaptable to accept technological changes,
Yes.
and work with startups or accelerators to recreate themselves.
Yeah.
Good.
They need to do that, because otherwise, for the conventional businesses, beyond the next 5-6 years, I don't know what the future is if they don't reinvent themselves right now.
Very well said. And in conclusion, I would say that there is an entrepreneur who's listening. Please write to us at yournest@yournest.in for any application, or go to our website, yournest.in, and there is a form for you to submit, and make that submission. We will come back to you on the next steps of being able to partner with you in your journey or dream.
Very good, Sunil. Thank you so much.